All right, good morning and welcome everyone. Peter's in our studio in Melbourne this morning, 11 a.m. Eastern Standard Time. Thank you for those who picked up on that. We appreciate that. Welcome, Peter. I'll hand over to you.
Thank you, John. So welcome to this session. The whole key here is on how to protect your business and your clients from the challenges imposed by the virus. Today, I just wanted to introduce you. Obviously, John has already spoken and he'll be facilitating today. John is the founder of Best Practice. He's an author, coach, and an educator providing leading small business development programs. We've actually engaged John on an exclusive arrangement to work with ourselves and our practices going forward, and we'll begin rolling that out very, very shortly. Andrew Vellner will be joining us. Andrew will be coming in on the phone. He has some video issues. And Andrew is the Managing Director of CPG Advisory and Research. It's an independent research house, and he'll be providing some of his commentary on the market itself. Lance Mickle. Lance is a practicing financial planner running a market-leading multifamily business. And the reason I asked Lance to join us is he's possibly one of the most proficient users of the digital and virtual media technology. And I think that's going to be quite important as we move forward. So the purpose of today is to share some tips and thoughts to assist you and your clients respond to the challenge that the virus represents. Many of us have been through Y2K, SARS, AIDS, the GFC in particular. Over the years, we have faced numerous threats, and the key ingredient from my perspective to survival and emerging successful is proactive communication. So we encourage you to reach out to your family, to your friends, staff, and clients, particularly your C and D clients, because they represent your bread and butter in such situations. Today's session will be recorded, and we will end up by inviting all of you to attend a further session scheduled for next Wednesday at 11 a.m. when we'll show you how to use the technology we are recommending to reach your clients simply and at no cost to either you and or to your clients. So without further ado, I'll hand it back to John. Thank you.
Thanks, Peter. And certainly welcome everybody. A number of people have come on since we actually kicked off. So we'll keep going, and a recording of this event today will be made available to you, and you'll be encouraged to share that where appropriate with your business contacts, clients, and so forth, where you deem that appropriate. So to kick off, to understand what we're dealing with, this is an unprecedented scenario that we are faced with, of course, and what's really interesting is the amount of hysteria that we're already seeing around Australia. We're seeing things happening like, some incredibly emotional, verbal, and even physical, in some cases, violence in our shopping centres, people clamouring for grocery items and stuff like that. We're seeing an enormous amount of stockpiling and fear-based, overspending, overbuying, hoarding content. Even the Prime Minister's on about that yesterday. The real issue here is the economic impact for small business, and the 60% employment sector that small business provides, and our ability as advisors to step up and hold the line, and in other words, to maintain our state of mind, to maintain our purpose, our ability to influence, support, guide, nurture, and reassure as much as possible our clients and our communities around us. Now, this is something that I've run a very similar session on Monday for our accountants right across Australia, and I've really challenged them to step up and move beyond their own, individual anxieties, if you like, and personal concerns and fears that they may have, and to recognise the opportunity that is in front of you as an unprecedented opportunity, as much as it is an unprecedented time of uncertainty. And This is just absolutely so true. You'll see us, and the more you monitor the best practice brand, my brand, and what we will put out there progressively, almost every 48 hours for the next month, you'll get a sense of that. You'll start to realize just how unique this opportunity can be for you to get on the front foot and rise above your own anxieties and your own grievances and stresses and concerns. That's not to say there won't be financial implications. Of course there will be. So we're not living in la la land. We're not living, on another planet when I say these things. But what I am saying to you is that very, very likely, if we don't take a conscious, positive action and stance on this individually, you are very likely to be sucked into the cycle, which is otherwise going to be fairly telling and fairly challenging to work through. Now, just a reminder for my team that I've got a CPD code I must play before the end of this session for you to all claim your CPD for today's session as well. All right. So my team in the background, Lauren, you heard that. I've got a CPD code, Olivia, thanks. And we'll get that up and into the final stages. So just to give you an understanding of the magnitude of how rapidly things are changing, stimulus packages at a state level for small business are starting to roll out. So the Queensland government, for example, is offering up to $250,000 in short-term loans that are interest-free for small business. Now, if you're not looking for this information, how can you possibly respond to your clients that own and operate businesses? So we've got to make sure you're getting access to this information, and you've got to be open to receiving that and learning how to interpret that where appropriate. Cash flow payments for up to $25,000 for employer organisations. That's for businesses turning over less than $50 million and that have got BAS lodgements coming up in April. So if we drop the ball, if as advisors and also accountants and bookkeepers, if as a community in business we drop the ball, we stop lodging, people don't get access to these things. All right, so we've really got to stay calm and focused here. 50% wage subsidies for apprentices and trainees. We're about to take on a young fellow we've offered him a job yesterday. We will be classifying him to comply with that funding. We will take that opportunity. Why wouldn't we? It would be insane to not take that. So this is what I'm saying about getting on the front foot. There's also the asset write-off. Now, this is clearly a capital expense type of an scenario. If you weren't going to spend the money, you're not going to get the gain, the value here. The tax office love pumping their chest up on this one, don't they? But the reality is, if you were going to spend up to $30,000 on anything, you can now spend up to $150 and get an instant write-off there. That obviously needs to apply and how you do that. 50% accelerated depreciation for investments as well. That's something clearly all the advisors need to understand. And interest-free loans are continuing to be identified, and there's all sorts of categories. So we'll be building a reference library for you of all of these different things alphabetically, so that you can, and that'll be updated every 48 hours, so that as new state and federal products, support, packages keep coming online, the master document will be updated on Google Drive, and providing we've got you linked into that, you will automatically get an updated version received like an email, and you'll click on the email. So let's make sure we get you registered for that today. Now, some interesting examples out there. We believe we are leading by example with the intention of setting a benchmark for you to follow. So anybody that's currently a best practice member, they are receiving phone calls every 3 or 4 business days right across our network from my team and myself. And where appropriate, there's a 10 to 15 minute, what we call a COVID-19 strategy call. So we're doing that very intentionally. We're asking every one of our accountants and business owners that we mentor, financial advisors, bookkeepers, and SMEs, we're asking them straight up, what is your COVID-19 strategy? All right. We are leading with that. We're starting with that, and we're not even getting onto any other value-added conversation at this point. Now, despite the fact that we've got private coaching, rolling personal development plans that we document, we are literally putting those on hold, and we're focusing on a brief conversation for the entire client base. So if you think about where you're at, many of you have got recurring revenue, and you might not be satisfied with how much is there, but what is most important right now is every one of those clients gets the 5 to 10 minute phone call. What is your COVID-19 strategy? You don't necessarily have to have all the answers, but if you start to understand this, and if you watch this recording over and again, you'll get much more confident in that regard. We've also this morning cut a direct video for SMEs. So we've got a 4-minute video we are uploading as we speak in the background, which talks to small business owners about what they can do. And we've started identifying some amazing examples around Australia where people are innovating already. And I'll give you a couple of simple examples. There's a local butcher's shop in the Hills District in WA. And from Monday, he closed down the public entry to the front door. And instead, he's got an entire database online. He's phoned all his clients and he's taking phone orders, online and SMS. He's then systemized the SMS procedure to notify when their goods will be ready to be collected. His customers are driving to the car park, do not leave their car. His team are loading the goods in the boot of the car, already boxed up, packaged up, and he's thriving. He's absolutely thriving. So he's selling twice the amount of meat per day, every single day, than he would normally sell per day in the 14 days prior to Christmas. So this is an example of turning a negative into a positive, right? We've got a bakery at Coogee Beach in New South Wales. They've just launched a free delivery service. So they're not even charging for delivery as a means to stay connected to their client base. And many of the clients are elderly as well. So what's happened is the elderly community in the Coogee region have in fact gotten on the phone, spoken to each other, told their families, and everybody is hovering around and recognizing and the accolades of the values and the behaviors of that bakery. So they're really putting them up in lights. There's a bookstore that again has closed their front door, and this one's also in WA, and they're offering again free home delivery. They're also offering to help consult so that their clients are able to talk to them. So with school holidays coming up, they're consulting on some interesting books for the children and so forth. Again, they're innovating. It goes on and on and on. So we're going to create a brand new segment we'll be sharing with you every 48 hours that you'll be able to inspire and share with your clients about the Australians that are doing something about this. All right. So very important stuff. In terms of course, Lance, Andrew, and Peter will talk about there's fundamental economic implications to your portfolios. We know that. That's just undeniable. But the success stories go on and on. So we'll have a separate release of those. What's really interesting, I'm going to share the global heat map with you, just as the people that are allowing us to see you because you've got your cameras there. Just wave your hand from side to side if you've seen a global heat map online. Have you seen one of those? See, okay, about 50%. So if I share my screen, I'll just show you two different and very interesting reports that show you why this is so important. And this helps us to relate to our clients, okay? Now, the first global heat map, I'll come back to this one that's on the screen at the moment. The first one that we're going to show you is the one that I think Peter may have even brought up in February in the Back to Business roadshow. Now, what's interesting here is that the cases are in certain countries subject to their policies and how they're handling locally are either being reduced or are tapering off, or they're continuing to spiral and climb. So the more diligent the activities of each government are in taking the advice of those that have, dare I say, fallen before them and been a little less pre-prepared, and were hit by surprise, the more effective these things are. And you can really see this in the second chart here. So what we've got here is something very interesting. It shows you that in cities or countries like mainland China, Italy, Iran, and those first three, and I guess to some extent even Spain and France, whereby the country was hit by surprise, where they didn't have the element of forewarning, such as the lucky countries like ourselves and some of the others that you'll see in a moment. They are the ones that have not only got high infection rates, but also high mortality rates, high death rates as well. But the countries that have done an exceptional job are the ones that have actually been forewarned. You can see here that some of them have done incredibly well. And what that is that they have gone into lockdown modes far more quickly. Now, the reality is we're seeing a lot of social media hype, and unfortunately, a lot of people in this country watch way too much TV, which means they're going to watch way too much social media. So they're going to say things like, and there's some really poorly, some uneducated banter going around on social media, I think fueled primarily by the public. And it's talking about the fact that if the common flu for 2019 has killed infinitely more people around the world, why is this such a pandemic? The relationship is the actual, the deadly calculation as the percentage of fatalities associated with the flu compared to the percentage of fatalities associated with this virus. So this virus is running at about a 5.5% mortality rate, the coronavirus, whereas the flu is running at a 0.5. So a pandemic with this flu is infinitely more destructive to our human race. Okay, and it's really important to understand that. Okay, what is going to happen in the near future? Well, we're going to hand over for a few different perspectives in terms of the economic side. But I think what's really important, and I want you to understand this, is that what we have is a once-in-a-lifetime opportunity to lead by example and continue a business as usual approach as much as we can. Now, one thing's for sure, some of the people that we've been mentoring have been paying attention for the last 12 months and some of them have not. So let me explain what that means. The people that have been paying attention that we mentor have all got a beautiful thing running on their phone called Zoom. So not only are they running Zoom video conferencing software, which is what you're experiencing today on their laptops and in their PCs, but they're also running it on their phones. You can see the little app there on the left-hand side. Now you can download that app from the Google Play Store or from iTunes for your smartphone, and you will instantaneously have bulletproof video conferencing irrespective. You don't have to worry if your client's got FaceTime or they're on a smartphone that's not on Facebook. It doesn't matter. As soon as you've got that technology, you can run free video calls up to 45 minutes. So the free version of that gives you a 45-minute video call, as many as you like. You're only paying your telephony company, your data company. That's the only payment you've got. So the first thing that we had our advisors doing when they start working with us is getting onto that and using this technology and insisting on a video call with every single client interaction you have, right? And what happens is occasionally you'll have a client or a prospect that just resists, but of course the 80-20 rule will suffice, and you'll get some FaceTime with your clients and your prospects if you start to adopt that policy. It's easier to learn than just about any app that you'll find, but you've got to get started. And that's part of the reason why we've used this more contemporary methodology today, is to get you moving on Zoom, right? If you haven't used it before. Of course, you may have used Skype or Google Hangouts or GoToMeeting or some of the others, but this thing floated on the stock market and created a couple of billionaires in a single day because it's so user-friendly. So don't avoid it, make it part of the way you do business. Now, the other thing that you want to think about is that our communities, the local SMEs, our client bases, they are all wondering what the hell they're going to do right now. But the irony is That's because of a 7-stage cycle that we talk about. So I want you to look at this cycle and understand where you personally fit. Where are you at with your own psychology, your own stress levels, your own grief and concerns? And I'll open up this diagram and bring it up on screen for you right now. It'll just take a moment to load. But this is a world-renowned expert in the space of stress and trauma. And so this is something not to be taken lightly. So here we go. So when we first learned of the coronavirus, we're in shock and awe of the concern of places like Italy, aren't we? And other countries that have been hit hard and hit early. And we're not aware of what they're going through, but from a distance, we've got shock and surprise. We go straight into denial, don't we? We go into denial. We've probably already been there for the last month or two. In fact, even when we're on the roadshow, we were probably all in denial about how that was going to impact on us, okay? The reality is that Elizabeth Kubler-Ross, an expert in grief and recovery from grief, was highly recognised for this particular model. We then start to move into frustration. Now, right now across Australia, we've seen media charged, frenzy buying. We've seen all sorts of frustration over the last 2 weeks. And I guarantee you the next step is depression. So the next step is going to be 80% of our society is going to be home-based, leaving the television on the news channel most of the time, almost 24/7. And then even when they're not looking at that, they're going to be looking at Facebook and other social mediums for more doom and gloom. This is the biggest soap opera that we will see in our lives. Okay, but the irony is there are a few professions that have to ignore that and get on with it, aren't they? Doctors, medicos, nurses. These people can't have a depression. They can't have a situation where they go offline. Well, guess what? Can accountants, advisors and bookkeepers go offline and have one as well? I don't think we can. I don't think this country is going to be in particularly good shape if we don't step up. All right? Experimenting is the next phase. Now, what this means, I'll give you an example. We had a restaurant on the weekend in Victoria complaining about, suddenly their foot traffic is down. We had a coaching or a strategy session with that particular restaurant. We used Zoom. We didn't have to go there. Today, they're rolling out an online menu. They've now built a database of over 500 past customers that have been into that restaurant in the last 3 years. It's only been open 3 years. And they did not have that database. But they sat still all day Sunday and started building it. They've now SMSing and taking orders online, and they've transformed that. There's a very famous high-profile restaurant in South Yarra done the same thing. They just moved straight into the next phase called decision, right? In the decisioning phase, Mr. Miyagi, Japanese restaurant, 95% of their current turnover has been sustained all online. They're all takeaway orders. Now, mainly lunch is their big one because they get a lot of professional traffic. And of course, integration is transformation, isn't it? The airlines are very concerned about this at the moment because what they realise is as we integrate online systems and processes, we may not use air travel, we may not bounce back as aggressively to using air travel as much as we did. Understanding this is very important. And where you are right now is going to play a big role in how you handle your own business situation and how you communicate with your clients. So we'll be releasing to you today via your team a recommended communication package. That's an email, a video, and a download. And the download will have an enormous amount of content, some of which I've been sharing with you so far to do with government grants and so forth. There's a whole bunch of tips on how to transform that business and innovate. And remote working as well, and of course, some tips on how to get access to all the stimulus packages and an online reference to where we'll keep those things up to date as they keep unfolding. At this point, it's probably time to hand over to...
We'll start with Andrew Gallner. Andrew, are you online?
I don't believe we've seen Andrew connect. Perhaps we'll message Andrew while we bring Lance online.
Right, let's bring Lance in.
Yeah. Okay, I'll just bring you online now, Lance, and all yours, mate.
Thanks, John. Got access to me there? I've still got you on my screen, John. All good?
Yeah, you're all good to go now.
Okay. I'll just get my... Not seeing the screen. Sorry, John.
Okay.
I know what you've got locked down there.
So I'll just confirm for the rest of our audience that, but just a thumbs up if Lance is coming up on the screen.
Yeah, I've got it now. I've connected.
Yep,
got
all
it.
is
Thanks
well,
for that.
mate.
Thanks, John. Hi, everybody. What I want to do is just really talk about just a couple of things there, just to correct. John, he's doing a million things, a poor guy, and well done, John, for the presentation. Is just a couple of little points. 45 minutes, John mentioned. It's 40 minutes you get free if you use Zoom, which I'm going to talk to. And it's free unlimited if there's you plus one. So most of the clients we have, we're talking to mum and or dad, or one individual and a couple, like we've got Peter and Marissa or whatever together on the one screen. And it's free and it's unlimited. It only becomes a cost when you have 3 people who have come into the Zoom account. Okay, so I've started using Zoom in 2012 to give you some idea. So it's been around a fair while. So what I want to do is just share a presentation I've put together. Just there you go. You should have that now, no problem.
Yep.
Okay. So what I want to do is talk about exactly what John's talked about. I want to talk about what I deem as a planner with clients, an unparalleled chance for you, for your business and for you. And why is it unparalleled? Because never in the history, this is like after the bubonic plague in London, after the Great Fire. That's what we're sitting with here from a business perspective and for you as a lifestyle perspective. So I just want to acknowledge the traditional owners of the land, pay my respects to the Aboriginal Torres Strait Islanders people in the webinars today. General advice warning for Reg, who I can see is on the webinar. Okay, so the issues I'm going to talk through pretty quickly for top of 10 minutes is segmenting is critical. And I'm going to get into the how of doing that in a sec. Don't hide, and I'll talk to that point. Talk to your clients, don't email. I don't subscribe to emailing. I don't subscribe to talking to people on the telephone in these times. It's disrespectful, it's offensive, it's rude, it's ineffective, it's lazy, and it's unprofessional. A better business, if you choose to use Zoom, take the chance and I'll talk to why I suggest now is a great time to be using this type of a product. A better business and a lifestyle that you can choose, and file notes of your friends. So let's get into that. Okay, segmenting is critical. My saying, you must treat people fairly, but you can't treat everyone equally. You must treat people fairly, but you can't treat them equally as a business owner. People don't care how much you know in these times. They rather, it's how much you care. They don't want your knowledge. They don't want your presentations. They don't want your Vanguard Index historical slides. They want to know that you care. So go through whatever systems that you have, whatever they are. I'm not here to preach best practice and CRMs and all that junk. I'm just here to talk as a common planner to my peers. Whatever system you've got, post-it notes, diaries, I don't care. Capture the mobile numbers and the email addresses of the people that you wish to retain. Not what Peter Daly tells you, not what John tells you, not what I tell you. It's your business. The people that you wish to retain. You have to get their mobile numbers and their email addresses. That's the very first step. Do not focus on the client that is making noise and demanding unless they're paying you appropriate remuneration. This is a business. Doing so will stop you helping the people who remunerate you fairly, who want your valued advice and you want to deal with, and they want to deal with you. This is not a time to be servicing all and the squeaky door gets the oil. This is a time to step up and be what you want to be or pretend you are or have told people you are, an advisor, a consummate professional, a business owner, a person who cares about their clients. Always thank your clients for their custom and trust. If there's something they want to hear now, it's thank you. So I've put this in order. Always thank your clients for their custom and their trust. The second point is don't hide. I was very fortunate that I stood in a room with Robbie Bennett in 2007, where he made this very point. It's not my idea. I'm taking it directly from what Robbie Bennett said. Don't hide in the cupboard. Don't hide in the closet. Don't hide behind your emails. Don't get busy. Don't find excuses. Do not hide. This is the chance to stand up to people and let them know that you care about them and you know who they are. The third point, don't talk to your clients via email. Do not send out emails thinking you're being effective. They're sick of reading and hearing about emails about the coronavirus and that you care. And I'll get onto Zoom as the medium to do that. The very minimum you should do is call people, hence you need their mobile phone numbers. The fourth point, take the chance to learn how to use Zoom. John correctly has spoken about what he does in his business with his clients. The reason I'm putting this point forth is I don't get shares, I don't get kickbacks, I'm not a shareholder in Zoom, etc., etc., etc. Now's the time to learn to use Zoom for meetings via video. And the reason I'm putting that point there and putting learn is that you're able at this opportunistic time to ask your clients for patience while you learn. You can be a human being. Don't try and be something you're not. Don't try and hold yourself out to be an IT, video, fintech expert. It's your chance to start. If you've ever wanted a chance to use this stuff, explain to your clients that you care about them and you're communicating, and it's important that you look them in the eye as much as you can. Because of the coronavirus, you can't meet face to face. You don't think phoning them is appropriate, so please be patient with you. You're not going to get this chance post this event. You invite the client, so all they have to do is click on a link. John spoke to that very point. Skype is a headache and a nightmare for one-to-one business meetings, video meetings, a nightmare, unless you're experienced. GoToMeeting is probably the second best to Zoom, but it's of enterprise quality and clunky. That's why I've used Zoom since 2012. What happens is you invite the clients, just like you got this email today, you clicked on the link and it worked. I'd be very surprised if more than 20% of the people who are on this webinar had Zoom as an app on their desktop or their mobile. I'm looking at it from the client's perspective as an advisor. I'm not looking at it as a management or a shareholder perspective. I'm looking at it as talking to your clients. Make it easy. Don't try and be something you're not. And by doing so, you will build a better business and or lifestyle that you choose. If you use Zoom as a servicing tool, you'll save hundreds of hours a year in meeting rooms and coffee shops. Hundreds of hours a year. If you wish to find time for FASIA study, you've now got it. Use Zoom. If you want more revenue, use Zoom. If you want regulators to be happy, use Zoom. If you want engaged clients, saleable clients, better sticky business, use Zoom. File notes are your friends. It's easy to justify you're too busy for file notes. However, a judge, bureaucrat, boffin, regulator won't and shouldn't care, as you have a fiduciary responsibility and hundreds of requirements under all sorts of codes of ethics, etc., to do so. There is no cop-out for being non-compliant in relation to recording discussions regardless. Why would you contemplate using Zoom for file notes? Because you click one button called record and it records. You can mute, unmute, stop recording, start recording at the click of your mouse. It produces a file, which is a format that sits somewhere on your computer, which we're going to talk about more next Wednesday. but it gives you a file note that you have communicated effectively. If you want to know how someone understands whether you've just articulated a presentation and that you've shared the file to them, I'll give you a clue. Like John said, thumbs up if you understand that. The client puts their thumbs up. There's a depiction that any regulator is going to be pretty pleased with, as opposed to what you think they said. On the other side of this event, whenever that is, those who wish to support the argument for asset-based remunerations, review your approach. I'm not saying it's right or wrong, it's none of my business. Always thank your clients for their custom and trust. It never happens, sadly. It's just a given. I'm a guru. I care about my clients. I'm knowledgeable. They know. Do they? You are the person they're going to at the moment in despair. On the other side of this, if you use technology like Zoom, enjoy the hundreds of hours a year for your business and or you, that you will, as a result of treating this as a pilot with your clients and getting away with it, if you will, in inverted commas, you will pick up hundreds of hours a year. Enjoy grateful and engaged clients. Enjoy increased profits, or how to increase profits, because you've now got more margin, because what you're getting paid in revenue versus the cost of renting offices, coffee shops, boardroom meetings, so on, is eroded. This is free. And on the other side, establish what's called a business continuity plan. If you want a copy of mine, ask. Simple. I'll send it to you in Word, so you can copy and paste and plagiarize and do what you like with it. Yesterday, I instigated my business continuity plan, which for me is business as usual. What it shows your clients is that you've got a business. So on the other side, not now, take those points. So Zoom, how and why. What you need to connect to your clients. You need an internet connection and you need a personal hotspot that works. So I'm going to talk about more in detail next Wednesday what a personal hotspot is. Most business owners don't have a clue what a personal hotspot on their phone is. So they run data plans, USB sticks, all sorts of stuff, and spend $3,000, $4,000 a year on data plans when it's free on their phone. The point is Zoom works with hotspots. So you don't need a router, you don't need a modem. If you're renting, you can use your mobile phone. You don't need any fixed things. Zoom has a mobile app and a desktop app version. It has unlimited, the point I spoke to earlier, unlimited one-to-one meetings that are free. If you have more than 40 minutes, you need to pay a subscription if you have more than 3 people. If you wish to role play with me, send me your mobile number and you can pretend to be the client and you'll get to see how easy it is. I'll do those role plays with you for free. Your role is to be the client. How do you invite people to join a meeting? There's a link there for you, which is directly to Zoom's video that you can click on how you do that. And the point the point I'd also say to that in closing is file sharing. Exactly what John's doing at the moment. What John's doing is sharing things from his computer, same as I'm doing with my PowerPoint. The thing I'm going to talk to you about next Wednesday is anything you do currently with your face-to-face meetings, with documents, presentations, printouts, PDSs, whatever you like, you can do via Zoom. Free, recorded, compliant. So there's a share mechanism that you do not need to meet with people face-to-face, which is currently the battle with the coronavirus. So take the opportunity, let clients know you care about them by seeing your face and comfort. There's enormous value in that. We all know that as planners. Don't send emails out with PDFs and feel as though you're doing something. And unfortunately, it's going to mean being uncomfortable, having to learn something you don't know and can't control. Hence the reason I've put my hand up to say, if you want to role play, contact me. I get what it's like to not treat clients as guinea pigs. I understand that. Okay? So the offer's there. If you wish to take it up, please take it up. So that'll do me, John. Any questions? Happy to take them.
Thank you, Lance. I think if we postpone the questions to the end,
okay, fine.
We'll send it through and then we can respond as we're going.
No problem.
The key thing there is I really appreciate the effort that Lance has put in and he's offered to support. That's tremendous. We will be running that session next Wednesday at 11 a.m. Sydney time. And it'll be Andrew and Andrew Marsh and Lance running the session. So again, there'll be an invite sent out shortly. What I'd like to do, though, is to proceed with Andrew Vallner. So, Andrew, we're just bringing you in. Are you online?
Yes, can you hear me?
We can hear you. Everybody else, I presume?
Indeed. Welcome, Andrew.
Thank you.
Thank you. I won't be able to video in, so I'll just talk over the slides, which can you confirm that you have access to my slides?
We do, and we're just bringing them up now.
You've never looked better.
Okay, I'm currently in isolation, so I'll leave it to you to decide whether that's to keep me safe from you or you safe from me.
All good to go, Andrew.
Thank you. So I've asked to put together some notes on protecting clients from recession topic, but from an investment point of view. I mean, obviously, the time to have that discussion is not when markets are already down 35%, but I've tried to keep the views fairly generic and applicable to future cycles. But starting from the first slide, black swans do happen. As of December 31, policy was fine, it was supportive, interest rates were being eased, economies were growing at over 2%, which was the fastest for quite some time in Australia. Relatively, the US was probably actually outperforming most people's expectations at that level. Then coronavirus happened. I was actually in China just as it was becoming a thing. I was 4 hours flight away in Qingdao, but they were starting to talk about Wuhan, and even that at the time was a 1 month shutdown. They've extended Chinese New Year, which in China they call New Year. It was a brutal economic shock, but it wasn't a recession. And the markets were expecting this to hurt China in the very short term, followed by a stimulus package and a rapid catch-up. And that is pretty much how it's played out in mainland China. Hong Kong also has negligible deaths. I don't know that Macau's had a fatality yet. And Wuhan's reopening, China's supply chains are reopening. So everything in China has played out pretty much according to the optimistic best case scenario. What changed was it appeared in a massive pocket in South Korea, simultaneously in Iran and in North Italy. Now that's a recession. The previous dozen events weren't because they were within the policymakers' power to overcome. There's not much you can do to stimulate activity when people are ordered not to leave their homes. So the government is focusing rightly on business survivability, particularly essential aspects of the supply chain or essential infrastructure. If you have one failure, if an airline goes broke, there are other airlines. But if the airport goes broke, you're gonna have a difficult time landing all the planes at Bankstown. So the bailouts will be concentrated on the systemically important, while things like loan guarantee schemes and other cheap funding to get people through to the recovery mode. Realistically, the northern summer is likely to be helpful. There's been very few deaths in hot climates, whether equatorial or the southern summer. I think Australia's only originated 3 fatal cases, and those were extremely elderly people. So yeah, northern summer should be helpful, but ultimately this needs vaccines and antivirals for the market to clearly say we're now past it. Let me remind you, markets do anticipate recoveries. It's by the time you see the recovery, it's a bit late. So within the capability of everyone to do anything about it, crashes are the consequence of investing. If there were no crashes or if they were avoidable, we'd all earn the 0.25% bank bill rate that will take effect today. But what to do about it? Well, step one is don't make it worse. And that's it's easier said than done. I mean, if you were the first person on earth to learn that there was a novel coronavirus in Wuhan and you said, that's it, I'm selling all my Chinese shares and I'm going to the furthest possible thing, which is New York property. Nothing to do with Chinese supply chain, nothing that would interrupt in any way. I'm going to buy Simon Properties. I'm going to pick the best quality, biggest name in American retail malls. The Shanghai Stock Exchange is down 9. Simon Properties is down 70. In 2007, of all the counterproductive things I saw, was people being advised to flee what was being described as a credit crisis and go to the safety of equity. That's insane. They lost 60% after losing 10 or 15 in credit between February and November 07. So doing something is easy, doing the right thing quite a bit harder. On the next slide, I've talked about falling knives. Half of the people want to hide in the fetal position and do nothing and possibly sell everything they've got. The other half want to buy everything. So by all means, bargain hunt. Recessions are the opportunity to buy assets at great prices. You weren't seeing a lot of great prices in December. Distressed sellers are the best people to buy from, whatever the asset class is. If a bank is in foreclosure, it's an asset they desperately do not want to own. And that's where I've bought pretty much all of my properties. It's how I access a range of asset classes. So I want to find the most distressed people selling, but it's only a bargain if you understand everything about your investment. What is the actual economic outlook? How much is the contraction going to be? At the moment, we haven't even seen the first quarter, let alone the last quarter. My suspicion is it's going to be very deep, but we don't have any visibility at all, and we're just starting now to get the first employment data from this event. What's the outlook for your investment cash flows in that environment, and what is its valuation really? And you have to want to own the asset. If it's an asset you would never want to own under any circumstances, it's probably not a bargain. Now, there are some things that are so leveraged or so distressed that they will go to zero, and then no bargain is a bargain. Well, even if you pay 1 cent for it, you still lose 100% of your money. We saw that in some REITs in 2008 that were never able to come back. Others that were stronger were a fantastic buying opportunity. But your investment has to be able to be resilient to the environment that we actually experience. On the next page, this is probably the most critical slide. If you have a money destroyer, there's nothing like a recession to crystallise that event. So you have to avoid these before the event. The simplest one is simply overpaying for assets. Expensive assets have the furthest to fall. In 2000, the American market was down by half. The Australian market pretty much went sideways through a global recession. Abusive products are abusive. They're out there. There's a big industry producing them. A lot of the structured stuff and the people who are selling LICs at IPO at or above NAV, they're obvious categories that just cannot sensibly be invested in. The capital guaranteed illusion, if the only thing you have is a non-recourse loan, what the client experiences is, I paid 3 years of interest payments, possibly option premiums or whatever they were called. I got nothing back. I lost 100% of my money. The bank, and let's call it Macquarie, will stand there saying, no, you had a capital guaranteed product and we walked away and you lost nothing. You only had to pay your interest. The client had 100% loss. So don't fall for that illusion. I've got to say the Beacon Investment Committee was very strong on this. Most recently, 2018, we were pushed and pushed and pushed to invest in one of these products. It was garbage. We rejected it and lost some sponsors over that. Ask, why am I doing it this way? Is there a better way to access the same asset? Now, this structured product I talk about, it was pretty much an option. If you look through the hype, it was an option over the index. You could have simply gone and bought the index options through a broker, had a better structure, better guarantees, more optionality through to reset down, and you would have still paid 40% of the cost of the structured product. So don't be money destroyers, because they will destroy money. On the other hand, what's going to make you money? They say don't fight the Fed. The government decides to back certain things. If the government wants to support an asset, they're pretty big and they probably can. But you need to be clear on what they're actually supporting. In general, shareholders have got to look out for themselves. If the government bails out something, it's almost certainly the debt. We saw that to a lesser degree in 2008. They pretty much threw money at the banks. Everyone was made whole. They injected, and sure, they took equity in the banks, but the other classes were made whole. In 2011, BIS introduced new rules to ensure that could never happen again. So categorically, hybrids are expendable. If the bank loses enough capital to auto-trigger, they will auto-trigger. There is no way out of it. They will be bailed in. Sub-debt, less expendable, but you'll be bailed in before there is a cent of any bailout of government money. So these are not products that, even if the bank survives, even if you pick up a headline in the paper that says major bank bailed out, there will not be any hybrids or sub-debt left. Conversely, 2009, if you aren't familiar with the public-private investment partnership, Google it, read it again. There has never been and will never be a better investment in my life. It was Fed-funded cheap loans to buy the senior debt of primarily mortgage-backed securities and the like, and you were guaranteed to earn 10 times the government bond yield, and that was guaranteed by the same government. Whether you treat it as debt and take it out of your bonds because it's government guaranteed, or if you treat it like a growth asset and take it out of your equities, if the US government guarantees you 27% returns, you should take them. And that may well happen again. There could be similar programs based on that. So familiarise yourself with it. On the next page, the other government guaranteed thing is bonds. And it is an article of faith for modern investors that when the stock market goes down, your bonds go up. You're actually losing money quite a bit in March. And that's seeing risk parity funds collapsing, unwinding, spewing out all sorts of strange assets around the world. There are a number of funds that are down 100% because of leverage positions that they felt would be offset by other leverage positions. Inflation-linked bonds, the global ones are down 5, the local ones are down 7 month to date. I don't think anyone would have predicted that. So if you actually had an inflationary recession like 1973, it would be much, much worse, orders of magnitude worse. So we'd rather have a safer portfolio in general than a risky one that relies on bonds for protection, particularly when bonds are earning minus 0.9 in some countries. On the next slide, I was inexplicably asked about leveraged investments recently. Can't say I was wildly receptive or that any of the committee were, but there will come a time when it's appropriate to lever and that asset values are cheap enough that you can generate good cash flows from them to pay for the leverage. If you're going to lever, I can't stress enough, use term debt that can't be revoked on you. And I know the first thing people say is, I don't want to place the house at risk. They want to borrow against the house to invest. Mortgage redraw is cheaper. Nobody disputes that it's better to pay 2.6 than 4.9 on a margin loan or whatever they're charging these days. But not just cheaper, it doesn't have margin calls. If my stocks go down further, the bank's not going to ring me up and say, well, you've got to post another 50 grand margin or selling your stocks for you. They don't care. That money's there for 20, 30, 40 years. It's mine to do with pretty much as I wish. Are my stocks going to recover by 2040? I certainly hope so, but long-term debt gives us every chance. We can't be stopped out of that like you could on a margin loan or in products that are not called margin loans but behave very much like one. There are products that have internal gearing, no margin, no market value triggers. I've got to tell you, there really aren't many. Fortress Notes was a complete debacle, a dreadful product, abusive product, but one thing it did have was term funding. So it was down 96%. That term funding meant somebody coming in 2009, I've got to say I didn't pick the bottom, but I wasn't too far away, could take a 5-year view that at some point this will pass and the loan asset class will recover. As it turned out, that was about a 10x return off its lows. Term funding meant it lived to fight another day, and it kind of got half the original investor's money back, and from 4 cents to about a 46 redemption. On the next slide, diversify, it's pretty obvious. There are a lot of asset classes out there, and this sort of environment in 2008 was great for the mortgage belt. Not so much for trophy assets on Tamarama Beach, but in Fairfield, pre-Lehman, post-Lehman, prices were up 25-30% because low interest rates mattered. How much can I afford to borrow was the question that people asked. Diversifying into non-Aussie dollar assets hasn't completely protected everybody, but it's really helped a lot. The Aussie dollar's nearly halved over the cycle, and in the last, in the serious downturn, I think December 31 it closed at over 70 cents. It's now under 60 cents. So that's a trend that was very successful, probably halved your losses for global equities. That's now very aged, and I would really struggle to tell people to put on new, unhedged, non-Aussie dollar positions. In fact, we're encouraging clients to say thanks very much and switch to the hedged version to some extent at least. Commodities, gold did really well until it didn't. Silver's now struggling with gold, but they're not down terribly much. Industrial metals are terrible. Energy is terrible. The next time we have a recession caused by an OPEC or a war or something similar to that, commodities are going to be fantastic. The Russian market's going to be the strongest in the world if there's a war with Iran that causes the next recession. Didn't work this time, that's why you diversify. Mortgages could have a massive property crash. I don't think we will. The risk appears low. It seems to be a good diversifier at the moment and paying quite handsomely. And one that I talk about frequently is L1 UK. It's retail accessible, and they buy some incredibly distressed assets at some very interesting prices, and target double-digit returns. So you don't need equity risk to be trying to make pretty good money. On the next slide, and it is my last investment slide. Credit, again, something I talk about a lot. It is correlated to shares, but that's a feature, it's not a bug. It's supposed to be correlated to shares. It's supposed, in fact, to be used as a proxy for your other risk assets. You buy credit when it's better value to access the corporate value, buy loans, buy the senior class rather than the junior class being equity. Now, at the moment, leverage loans are down about 9 or 10. That's pretty typical 1/3 beta compared to stocks. Perfectly correlated. Terrible day in loans is a terrible day in stocks. You're not doing it for diversification. You're doing it to access the same risk return factor. In that context, people don't use it because they're trying to do fixed interest to be something different. It's not. Use it as a substitute for equity when appropriate. Now that ratio is pretty persistent, but if I can earn 7% yield through the cycle, some upside if spreads tighten, and do so with a third of the risk, well, I would only buy stocks if I thought they were going to make 20% plus. Now, unfortunately, stocks don't make 20% every year. If that was the case when I was at uni and we just had a stock market crash, and I'm thinking stocks look pretty cheap, if I'd have bought some stock in 1988, the ASX 200 would now be 319,000. It's not. It's about 4,900. So long way short of that is a lot average return. And in fact, the average return isn't too different to what credit's earned, 7 to 9. People hate it. It should really be the core asset class and everything else around it. There are times when credit looks wildly expensive, and December was getting pretty close to one of those times, at least in investment grade. Then everything else is probably also wildly expensive. Now on the last slide, I think most of this has been said earlier, but had to be said on COVID-19. Yes, half the people will tell you that more die from the flu. Now that's true up to now, but it isn't to save 3,000 people, it's to save 700 million. 100% of the population has been exposed to the flu. Everyone's met someone that's had the flu. Very, very few people have met anyone that's got COVID-19. So if you want to claim it's trivial, let's have that discussion after the last one's cured, after we're all vaccinated and we know that no one will ever die of it again. Compare the tally. If it was still trivial, then I'm wrong. But also don't count the deaths, also count the seriously disabled. People talk about other causes of death, heart attack, stroke, car accident, etc. But if I drop dead tomorrow, I won't be tying up a scarce ICU bed for weeks. And you don't catch my heart attack. You don't need to quarantine everyone that I've spoken to for a week. So that's the problem. The problem isn't necessarily the actual deaths. It's that they fill the hospitals so quickly and there aren't enough beds and there aren't enough ventilators. So totally support taking it very seriously, and hope everybody listening stays safe. Thank you. That was the end of my thoughts.
Yep. Thank you very much, Andrew, and of course Lance as well. We are opening the floor for questions now. We'd encourage you to use the chat box to ensure that your question is heard. You'll notice at the bottom of the browser there is a little pop-up thing that says chat. So if you use your mouse and you go to the bottom of the browser, you'll see that. And in fact, I'll do my best to demonstrate that for you. So by sharing my screen, and I may be able to bring that up in Zoom mode. So there we go. No, maybe not. So down the bottom of the meeting controls there, yeah, it won't give me the full view there, but you'll see at the very bottom there's meeting controls. Go on the chat box there and type in any messages you've got. I'll send a chat to everyone that actually sparks that for you. Test chat. So you'll all receive that. Test chat has come through from us to everyone. Thanks, Lance. You did the same thing. And when everybody's ready, if somebody is ready to go with a question, would you kindly just give us a wave if you've got the camera working? If you haven't, of course, it's difficult for us to see that. Then you may want to put a question through the chat box. Many of you don't have your video camera working at the moment, more than 60%. In terms of our content here, what we're doing in the meantime while we wait for those questions, and we've got one coming through. Just a reminder, we've got a whole downloadable white paper for you with a number of things in it: guides, checklists, suggestions, what's going on with the government, and also some tips on how to work remotely as well. We'll keep adding to that. Yeah, we've got a good question here. Does anyone know if once you catch the virus, can you catch it again? I actually don't know the answer to that. We'll make sure we get
There is some evidence of recurrence. It doesn't appear to provide perfect immunity. I'd suggest there is at least partial immunity.
from getting the first time, Andrew.
To the extent that there's been reports of reinfection, they're very, very rare, but then again, this hasn't been around terribly long.
Yeah. Yep. Thank you, Andrew.
And of course, every virus mutates. So even small changes mean you need a different flu vaccine every year. So wouldn't be terribly surprising to see the same thing here.
Yeah. Okay. Thank you very much. So again, we'll wrap this up with access. We'll email you all access to this particular recording online with the downloads as well. And in fact, the previous document that we created, the white paper, was already downloadable in the previous invite. So you go back and you'll see that button. However, it'll be continuously updated, that particular document. So we'll keep you alerted to that as well. Thank you for your time today.
Thank you. Thanks, John, for facilitating. Andrew and also Leah and Lance, thank you for your participation. Can I just say, this has been recorded, so you will be able to get to it. And as I said, Andrew Marsh will be sending out details of the session that we'll be running on Wednesday next week, which will go through some more detail on how to use this in your own area. And if you're wondering how to survive this, the only person online who has survived the Spanish flu is Trevor Potter. So I'd suggest you give him a call. All right, everybody, thank you.
And of course, your passcode to be entered via the Beacon portal for claiming your CPD is COVID-19. That's just been put into the chat box there. You'll see that. So COVID-19 by your standard accessibility point, and we'll make sure that goes back out. It'll be in the white paper as well.
Thanks, everybody. Thank you.
Thanks. Have a great day. Let's go and make some difference out there. Well done.